GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as satisfying as being the king of your neighborhood after setting the fastest run time for a segment on Strava. I'm your host, Jay Hamilton, and today we're talking what can we expect from the ETH ETF when it goes live, likely any day now. And here to guide us is Matt Hougan, CIO at Bitwise, who's put together an analysis of predicted inflows for the ETH ETF. And these aren't just random guesses. These are educated predictions based on deep analysis. Matt, welcome to the Milk Road Show.
Oh man, I'm so excited to be here. That's a high bar. Local legend on Strava is a real feeling. So
You got some of those? I bet you. I know you're a runner.
I'm not going to comment. But no, it's really great to be here. Excited to talk about it. Excited to talk about ETH and where we're going with that.
Awesome. Let's start with what are your thoughts on when we think this ETH ETF might go live? We thought it was going to be this past week, didn't happen. All right, now everyone's saying next week. Are we going to keep pushing back? When do you think this is going to happen?
Yeah, the magical thing about that is I can honestly tell you that I just don't know. The 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 way that I'm as insider, I guess, as you could be on this, in that Bitwise has a filing with the SEC. But the way that this works is you file an amendment, an S1, which is the prospectus, and then you get comments back from the SEC, and then you file again. That's how you communicate with the SEC. There's no like back channel. It's you publish and file. And so the stage we're at now is we're waiting to get comments back. Once we get comments back, we'll then know, are they is this the final round? And so launch will be 2 days after we file another update, or a day after we file that. Or is there another round? What I do think I could say confidently is we're moving down the track. The comments are getting fewer and fewer. And so that's a very good sign. But yeah, even from the Bitwise position, I don't know. But, hopefully soon. It's important to remember, again, we got spoiled with the Bitcoin ETFs, where things moved at an exceptional rate, right? Really fast back and forth. Lawyers exchanging drafts in a day. This is moving at a more normalized ETF rate. So yeah, I would be surprised if it were Monday, but it could well be next week if we get good feedback, or it could be later, or there could be some unexpected jaunt. That's just where we are.
Okay, appreciate your honesty there. Okay, so before we jump into your predictions on inflows and your thoughts on how that might impact the ETH price, I just want to talk a little bit about how you have gone about this analysis, because one thing I think that I really hope our listeners understand is we unfortunately are very used to on Twitter seeing people make bold predictions based upon a single chart or a few data points. And this is the opposite of what you and your team are doing. You're doing deep analysis based on multiple data points. So can you just give us some background about how you went about doing this analysis and what data points you use?
Yeah, absolutely. It frustrated me to see what we saw on Twitter, which felt like people, sticking a finger into the wind and just putting out numbers, this size, that size, it'll be huge, it'll be tiny. What we did is we decided to look at the data. So where we started was just by looking at the relative market cap of Bitcoin and Ethereum. We know how investors responded to the Bitcoin ETFs. They have 50 billion in assets. They've pulled in 15 billion. We knew they were successful, and that's a reasonable proxy for how they'll, respond to Ethereum. Everywhere you look where investors can buy both, they buy both. Why would it be any different here? And that looked like, the ETH ETFs would be about a quarter of the size. So that's one data point. But then we're, a little myopic here in the US. We think we're the only country on earth. But actually, Bitcoin and Ethereum ETFs exist in other markets. They've been in Europe for a long time. They've been in Canada for a long time. Those are mature markets. They're not exactly like our market, but they're not that dissimilar. I come from an ETF background, so I'm very familiar with these markets. So we looked over there, and what did we see? We saw that in Europe, ETH ETFs were 23% of the combined market of Bitcoin and ETH. And in Canada, they were 22%. The thing about these numbers is they're all basically the same. 25%, 23%, 22%. They're within the margin of error. And while, extrapolating from any one data point is risky, extrapolating from a bunch of data points that all tell you the same thing is pretty good. So that was how we sort of built up our analysis from there. After you do that, you just look at, the trajectory on Bitcoin ETFs are on, and you can do some simple math to get to your projection of net inflows. And that's what we think.
When you mention looking at the Bitcoin ETF, what are the major takeaways or lessons we learned from the Bitcoin ETF that we can apply to expectations for the ETH ETF?
Yeah. First of all, it was just a historic success. I know everyone says that, but I want to emphasize that. I, I was the CEO of ETF.com. I worked in that industry for 15 years. The fastest growing ETF of all time gathered $5 billion in its first year on the market. These ETFs have done 15 billion in 6 months. It's incredible. It's not just like beating the world record. It's shattering it. It's destroying it. It's 3x in half the time. It's unbelievable. So one thing we learned is there's a huge amount of demand. But there are a couple other things that I think would point to that are pretty important. The first is there's been demand independent of price. People forget Bitcoin price went from 50 to 40 when Bitcoin ETFs launched. And for what it's worth, for all we know, that could happen on ETH as well. There could be a sell the news event. But still, the inflows came. Since then, the price has been up, it's been down, it's been sideways. We had inflows. We had 2.6 billion in inflows in Q2, right? So we also know that investors are going to allocate almost regardless of what happens in the market. That's really important. And then the other thing I know from ETF history is that the first year is actually the hardest for ETFs. Usually ETFs don't sprint out of the gate. They like walk a little and then take a break, and they take time to get going. If you look at the gold ETF, which is maybe the closest analogy, it had a great year one. It pulled in $1.5 billion in assets. But in year two, it pulled in 3.3. And in year four, it was 4.9. Like, that's the trajectory. So the other thing I know is that these things will build over time. So that all informs what I think will happen with the ETH ETFs, which is there will be demand, it'll be significant, and I suspect it will build over time.
Well, let's use that to get to the $1 million question here, which is what do you expect to see? And I would love it if you could frame this as short term, medium term, longer term, like maybe like first few weeks by the end of 2024 and then by the end of 2025.
Yeah, absolutely. So I'm glad you asked that, because the first few weeks, who knows? Who knows? That's the thing. Here's the dynamic in the first few weeks that I think it's important to understand. You have this Grayscale product, the Grayscale Ethereum Trust, ETH, which has $10 billion in assets. And a lot of people have been piling into that because it was trading at a discount, and it's no longer trading at a discount. And so there is an arbitrage play. Those people aren't necessarily long-term buy and hold ETH investors. And so we can expect some of that money to come out, and you have to find people to backfill that. And because we already went through this same exercise with GBTC, the Grayscale Bitcoin Trust, there's a part of me who thinks people are going to do it faster this time. It's the second time around, right? And so I do have this worry in the back of my mind that the first few days could just be funky. We could see big inflows one day and outflows the next day. It's going to be noisy. Someone's going to write a news article that said the ETH ETF failed. The price could fall just like it did with Bitcoin. It doesn't have to be that way. It could just soar out of the gate. That's equally possible. But I think there's so many cross currents on that first week that it's anyone's guess. I know that's not a lot of comfort. I wish I could tell you it's going straight to the moon.
But you make a good point there that I think everybody forgets that Bitcoin price fell in the first few weeks after the Bitcoin ETF. It's like we all forgot that is our memory is so short term in crypto and in all investing for that matter. But that's what happened there. So why wouldn't we expect for a similar thing to happen here?
That is exactly right. And people wrote tweets, they wrote articles. This thing was a dud. I told you. Guess what? It's the best performing ETF of all time by 3x. Like, no, it wasn't a dud. Take a little bit of a longer view. So, yeah, I do think that's really important for people to remember. That said, on the 6-month view, I think we're going to end the year with, multiple billions, 3, 4, 5 billion in net inflows, regardless of what happens on ETH. Part of the reason for that is what we saw with the Bitcoin ETF, right? If you take, 25% or 30% of $15 billion, you end up with a large number, right? Multiple billions. Part of it is I just think the second half of the year is an extraordinary setup for crypto. You have the tailwinds from these ETFs launching. You have the tailwinds from TradFi really moving into crypto. You have the tailwinds from the US political process. I just think it's going to be a great half. So, could we see 3 to 5 billion in net flows? I think that's definitely possible. And then I think 2025 will be bigger than 2024. And our prediction was we would end 2025 with 15 billion of net flows into the ETH ETFs, which is really significant for an asset of ETH size. So that's what I think. That's what every data point we look at tells us, and also what we hear from investors talking about ETH. There's a lot of interest from the people we talk to.
And would you say that your predictions are low, medium, or high estimates? Like, and what could impact your predictions in one direction or another?
Yeah, I think they're low medium. They're not low. They're not low. There's definitely a world where we underperform this. That's a world where crypto enters a new winter, where we get the wrong turn in the U.S. election, where we get significant negative legal events, and DeFi continues to be sort of oppressed from a regulatory perspective. There's a world where these things are well and truly not successful. But I think there's a larger right tail, which means a larger positive, potential outlier outcome than there is a left tail, like a negative outlier outcome. And there are multiple reasons I think that. One is that ETH really appeals to traditional investors in a way that Bitcoin doesn't.
Tell us more about that.
Yeah, I mean, one way to conceptualize it is not every investor has an allocation to gold, but every investor has an allocation to tech. And I know I'm vastly oversimplifying and driving the maxis crazy on both sides of this equation, but many people conceptualize Bitcoin as a form of like digital gold, and many people conceptualize ETH as a new sort of global supercomputer, a new tech platform for tokenization, stablecoins, etc. And if you think the long-term investors in an ETF are more TradFi than crypto native, and that's debatable, but I think long term there's a huge well of TradFi assets. You could see, outsized interest in ETH, and then you could also see outsized interest if 2025 is a runaway train for crypto. If it's just a huge bull market, that definitely will feed into itself.
Yeah, no, and that fits very much with our beliefs here at Milk Road. It's difficult not to be too bullish right now, in my mind. I often find for all of our listeners that I'm always trying to take both sides, and I'm always trying to present the bull and the bear case. But I'm about as bullish as I think I've ever been in a long time right now, for multiple different reasons. And all of our listeners would know we make this show every day, so there's a lot of things we talk about. I'm not going to reiterate them right now. Here's the big question I have for you, Matt: is what does all of this do for the price of ETH? And I know this is the question that our listeners want to know the answer to. Where do you think we end up? And are your predictions for the price of ETH just simply based upon what happened with Bitcoin? Because that's obviously a quick copy paste. Tell us what you think will happen.
Yeah. Again, with the caveat that short term, I think literally anything could happen. I think there's a big lesson to be taken from Bitcoin, which is injecting new sources of demand into an asset with relatively limited sources of supply or inelastic supply generally drives the price higher. The second thing I take away from the Bitcoin ETF is that happens and then hits its head at the all-time high, which I think makes behavioral sense, right? There are some people who are waiting for all-time highs to sell, and we've seen Bitcoin bump its head on $72,000 a few times. If I put those two together, I have relatively high conviction that ETH will drive to its previous all-time high and bump its head against it a few times. And then the question is, does it break through that level and move to a significant new place? I think if we get the kind of demand that I'm saying, if we get these, billions of dollars this year, $15 billion over 18 months. I absolutely think it goes through previous all-time highs and probably works its way toward a $10,000 level over time if the ETH is in a bull market. If we don't get those kind of inflows, then I think the opposite is the case. But that's what I would expect. Volatility around launch, if we see inflows straight up to all-time highs, bouncing its head, and then the question is, can it break through that barrier? And if it does, there's a lot of room to run above it.
I like it. I predicted ETH price would hit 10K by the end of 2024. If I were to sit back and look at that again, I think I'd adjust it to be more 8 to 10K. Feels like the range that I think we could be in, assuming, as you said, that we're in the bull run that I think is going to come in Q4 of this year. So I'm with you. Christmas might come early for us. There could be a really nice end to 2024. As you said, no one knows what will happen in the short term, and I'm equally I'm not concerned, but preparing an expectation that I think it'll be a bumpy ride for the first few weeks. If we were to ask you to play devil's advocate to yourself and your own predictions, what's the worst case? Because I'm not seeing anybody say zero. Like even the bears out there are seeing on the low end, I'm seeing a billion, probably maybe a billion and a half. So it's nobody's saying zero. What do you think are the worst case scenario here?
Yeah, something like that, $1 billion. It's not going to be zero. And the best arguments that the bear case has are the ETH futures ETFs were a dud out of the gate, which is a observable fact that is worth considering. And these ETFs won't have staking. And some of the early adopters in the Bitcoin ETFs were retail direct investors. Retail investors in this situation might choose to own ETH in a different way and stake it. And so those are, we bake those risks into our analysis that drags down what would either be an otherwise higher prediction. But those are things that you should think about. Like, could it be $1 billion? And everyone's like, we've been waiting for this catalyst forever, and now it was nothing. And enters like a typical crypto sort of depressive phase. That could happen. That's a thing that could happen.
Who's buying the Bitcoin ETF and the ETH ETF? It's something that I don't think those in crypto talk about. I'm sure in your world, I mean, you're looking at it every day, and but in crypto, we don't talk about so much, and I'm not sure we really understand who the buyers are here. We talked recently, maybe a few weeks ago, Coinbase had their crypto summit, and we talked about how coming out of that, there was a real message that, oh, institutions aren't really here yet. We all thought they were, but they might not be in the way, in the scale that we thought. Who is buying this?
Yeah, it's a really interesting question. So there are three groups in the Bitcoin ETFs, and then I'll tell you why it's an interesting question and what I think will happen over time. So there are hedge funds who are using Bitcoin ETFs as a trading tool. There are retail investors, and then there are some of what we would call institutions, which I think are better classified as investment professionals because they're family offices, they're financial advisors, they're institutions. Those are different audiences. If you look at the Bitcoin ETFs, the majority of it are owned by retail. Like that's just the reality. It's roughly 80%. The reason it's interesting is there are two things happening there. Actually, the Bitcoin ETFs are being bought by institutions at a level we've never seen in ETF history. So 20% of 15 billion is $3 billion. $3 billion in 6 months would also be a record, right? So institutions are moving into these ETFs faster than they've moved into any other ETFs. It's just that they're carrying along this massive retail crowd alongside of them, right? So sort of like two successes. One is so big, it's overshadowing this. I expect over time that ratio will move towards 50-50. Bitwise, we have a lot of retail investors who own our products, but we primarily serve financial professionals, and we can track those wins because those are our salespeople talking to people and they buy. The pace of those wins is accelerating. So I think, in a year, that'll be a 50-50 range. But I do see this take that there's no investment professionals. That's not true. It's just they're overshadowed by the size of this retail crowd. Actually, on their own, massively successful, right? And I think that gets missed in the data.
And why is retail buying an ETF when they could buy Bitcoin on chain? And then I think that sort of tees up the next question, which is, okay, if you can get yield on ETH, which you can't do on Bitcoin, but you can get yield by buying it on chain and then staking it, would that lead to similar numbers, do you think? Or are people going to just go the on-chain route versus the ETH ETF route?
Yeah, I think there are two answers to that. One is no matter how retail you are and how crypto native you are, you can't buy Bitcoin in your retirement account except in an ETF, right? Um, and I think the other reason people buy the Bitcoin ETF as opposed to doing it directly is honestly, it's an incredible deal. Like 20 basis points for institutional custody and trading. Good luck getting that as a retail investor, right? Good luck. The beautiful thing about ETFs is they let retail investors own the same assets as the largest institutions in the world, right? I own ETFs that the Harvard Endowment owns, right? It's crazy, but we've both chosen the same vehicle. That's the beauty of ETFs. So even for a retail investor who could do this on their own, the Bitcoin ETFs are an incredible deal. Okay, what does that tell us about ETH? Well, the first category is still true, right? If you want to invest from a brokerage account or an IRA or retirement account, you can't do that on chain. Just not going to happen. And there are plenty of crypto native people who want that exposure in that area. So that's still there. The staking thing is a question. I don't know how it's going to play out. From one perspective, you would think that would dampen demand. I think that's valid. The other thing is 2/3 of all ETH is unstaked, right? So the majority of investors are happy owning ETH without staking it. And so, yeah, could it from a data perspective, could it carve off a third of that half of retail demand? Yeah. Yes. Yes, it could. That's why you don't expect these ETFs to match their market cap weight, right? I was averaging like 22%. Their market cap weight would be like 26, 27%. That discount is in part this. But I think what the media gets wrong is like, oh, they don't stake. No one will buy it. That's just not, it's not true with ETH. Again, 2/3 is unstaked, right? So I think they're going to do just fine.
I agree. I think we're going to be looking pretty good. So if we zoom out, your predictions are 3 to 5 billion by the end of this year, 2024. 15 billion by the end of 2025. That looks pretty good to me, Matt. I like the sounds of that. If we take a step back, I want to get your take on the Solana ETF. There's been a few applications, like 2 now, Vanek, and 21 shares. Is this a Hail Mary by them, or is this likely to come soon? Where's your thoughts on that?
First of all, great firms, friends of mine. Friendly competitors, I guess, is the way to phrase them. I think it's a low probability, high impact filing is how I would think about it. If you look at ETF history, there's never been a commodity ETF approved, not just crypto, but anywhere, that didn't have a parallel futures market. So the gold ETFs, gold futures market, silver ETFs, silver futures market, Bitcoin ETFs, Bitcoin futures market. But it's not the law that that has to be the case. And so I think the way to interpret this is, regulatory attitudes toward crypto are changing in Washington, and they could change more in the next 6 months. And there's certainly a scenario where we sort of fundamentally rewrite what is possible, and there's no legal requirement, right? That's why I said it's a low probability, high impact. It's not a silly filing. It's not a press grab. They're filing because they think they can launch, and they should be commended for that. But it is at the same time counter history, right? And therefore, under the status quo, looks to me really unlikely, not impossible, but unlikely. But the status quo may change. Yeah.
Once somebody files, what is the timeline that the SEC has to give an answer by?
Yeah, 240 days, which, to save you the math, is something like February 22nd based on when they filed, which, if there's a election outcome or they replace the commissioner of the SEC, that would be under a new commission regime. So, yeah, I don't know what their strategy was, but I have to assume that they did that math. as I did, and thought about it. Right. I mean, again, these are great firms. They're ETF leaders. They're making smart decisions.
Long term, you think we'll see a Solana ETF and other token ETFs?
Definitely. Yes. Long term, I think we will. If you look again, look in Europe, they have a lot of ETFs. And guess what? The people who bought them gained exposure to the asset, which has either gone up or down. It's like perfect. Nothing happened. Nothing blew up. They work. The ETF wrapper works really well. So I think, we've entered the ETF era of crypto. Long term, we're going to have multiple assets. We're going to have index products. We're going to have, all sorts of innovative ideas. And that's going to be great for investors, right? We have to remember that not every investor is going to use an ETF, but the alternative to regulated products for some investors is going offshore to unregulated exchanges where like bad things can happen. So these are great for the ecosystem. And yeah, we're going to get more.
Final question, Matt. When you zoom out and look at the state of the market right now, we've got tech stocks at all-time highs and then crypto trailing and not doing so well. It seems to be a bit of a weird, we're in a choppy market. It's been a weird few months here. What do you expect to see for the rest of the summer and heading into the end of the year?
Yeah. I've written about this. I think what's happening in crypto is all the long-term news is really good. ETFs, institutional assets, regulatory changes, technological progress. It's the most constructive long-term outlook I've ever seen. And all the short-term news has been negative. It's Mt. Gox, it's the German government selling, it's Silk Road selling. It's uncertainty around the election, and markets hate uncertainty. And so the short-term negatives are suppressing the long-term positives. But the difference between them is the short-term negatives are one-off non-recurring events. And the long-term positives are recurring ongoing things. And that's just a beautiful thing for long-term investors. It's not a guarantee we're, up only. I'm not saying that. There's plenty of risks out there. But the sort of risk-weighted setup, from my perspective, as you mentioned, is amongst the most positive I've ever seen it in crypto. I could be wrong, but it looks pretty great.
Sounds good to me, Matt. Thanks so much for joining us today. For everybody listening in, if you have not seen one of Bitwise's commercials and ads, I don't know if you guys, I'm sure you guys got another one coming out in the next few weeks when this launches. But if you haven't seen these ads, you got to go to YouTube right now and watch these ads because they're fantastic. And send them to your family. They're a great way to describe crypto for those who don't know. Matt, thank you so much to you and your team for everything that you do for your space. And thanks for joining us today.
Thanks for having me. This was really fun.
In case you missed it, here's what else happened in crypto news today. But first, ever wish your crypto apps work together as smoothly as your favorite apps? Our partner, Agoric, is making that happen. They're using JavaScript to make building secure DeFi apps easier than ever. Do you want to be a DeFi pioneer? Check out Agoric's early access program and start building the future of finance today. Just go to agoric.com/EAP and start orchestrating the future of wealth in Web3. In case you missed it, MakerDAO, a leading DeFi lending platform, announced the Spark Tokenization Grand Prix to attract 1 billion, yes, you heard that right, 1 billion in tokenized real-world assets. Now, BlackRock, the world's largest asset manager, threw its hat in the ring with its tokenized treasury fund, BUIDL. BUIDL, already a behemoth at a $500 million market cap, joins other major players like Superstate and Ondo Finance in the competition. This move aligns with MakerDAO's endgame strategy to bolster its economy with stable real-world assets. The competition aims to onboard tokenized versions of traditional financial products like U.S. government bonds, with MakerDAO investing heavily in the winners. BlackRock CEO Larry Fink has previously expressed strong belief in tokenization as the future of finance. The tokenization market is projected to reach a staggering $16 trillion by 2030, according to Boston Consulting Group. That's all for today, folks. Thanks so much for joining us. Have a wicked awesome day. Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.